And we're live. It's June 2nd, 2020, 10:30 a.m. on the West Coast, 1:30 p.m. East Coast, 5:30 p.m. UTC. Coordinate your clocks from all around the globe. I don't know what that is, Australian Eastern Standard Time. You'll have to calculate that yourself.
What time is it on the International Space Station?
Do they use UTC or are they Zulu?
I don't know, but aren't they moving pretty fast through the time zones? I mean, it's hard to coordinate.
Yeah. That was very cool, that launch. Wow, that was inspirational stuff.
That boat was autonomous?
That was crazy. Yeah, the drone.
Fuck, man. All the Elon hating, you got to tip your cap to that. Even if you're like, oh, the science is BS, he had to orchestrate all that stuff, right? I mean, that's like saying, like, oh, you can't play all the instruments. Well, dude had the vision to bring all that together and put it together. Not everyone can do that. Even if you think he's a complete fraud, you got to at least say that's a hell of a fraud. Because he put a spaceship into space with two people in it.
Yeah, personally.
Well, not like personally.
Yeah, that was amazing. That was inspiration. When that blasted off, I was like, whoa, what a ride. Maybe it is worth being an astronaut.
I'll tell you what, before we start, I'd like to give myself a shout out for never buying Dollar General and for getting out of Restoration Hardware. That's been fun. Fuck me.
We've got an awesome lineup of people from all over the world here. Israel, North Carolina, Chesterfield, Chicago, Mexico, Perth, Toronto, Nashville, Tennessee. How you doing? Jake's going to do the intro today. You want to take it away?
Yeah, welcome everyone to Value After Hours with your host, Toby Carlisle, Bill Brewster, and Jake Taylor. Toby, what are you going to be talking about today?
Yeah, I was going to talk about the brief little run from value that started April 2nd, but it's a little bit boring. I'm going to talk about that too, but I want to talk about, just very briefly, mastery, hero dreams of sushi style mastery.
William?
I am going to take us to Aerospace World. I was going to talk Twitter, but maybe that'll be next week.
And I'm going to have another vegetable serving on being the right size. And we will be back right after this.
6 inches.
Who wants to take it away?
Anyway. Great. Yeah, good start.
Toby, why don't you start this week?
Let's do it.
I thought you were going to let me gather my thoughts. Well, I was inspired a little bit by Anthony Jeselnik when he appeared on Joe Rogan. It's one of my favorite style of Rogan episodes where he talks to a comedian, just because it's so foreign to value investing. And I love when they talk about their process, about having to develop material over an extremely long, like 2 or 3 years, to 2 years to get it to the point where you can then refine it and then deliver it and get it tight over another year and then deliver a special, dump the lot, start again. Kind of an extraordinary way of generating new material, living your life. And everybody's seen Hero Dreams of Sushi by this stage, so that's kind of just totally different again from comedy, where just by going through mechanically doing the same process over and over and over again, in a very small scale, Hero has developed this, one of the finest restaurants in the world, 3 Michelin chef's hats, 3 Michelin stars.
Stars.
I don't know. Who gives out the chef's hats?
Why do a bunch of brothers from a tire company get to decide what's good food? That's a better question.
Because they travel around, I guess.
Chef Boyardee? I don't know.
They're on the road.
Legit rating. I mean, it rarely goes somewhere that they mention that's bad, but it's a nice way to spin being rich into business.
It's a little bit self-fulfilling too, isn't it?
Yeah, for sure.
But I think about that in terms of investing. What does it take to master investing? I don't know if you ever actually master it. I mean, Buffett is a phenomenal intellect, phenomenal memory, learnt from the master. I missed it. What'd you say?
I said a has been.
Yeah.
He didn't buy the dip, dude.
He did not. and has spent his entire life doing it. Investing is one of the only endeavors, one of the few endeavors anyway, where you just keep on getting better. Like chess, the best chess players in the world top out at 35. You mechanically, or your ability to calculate peaks at about 35, and then experience can keep you in there for about another 5 years, and by the time you're 40 you're too old to compete at the top level. So chess, maybe poker you can keep on getting better, but then poker evolves so rapidly. It was the kids came through who'd played 1 million hands online, which was the same number of hands that some 72-year-old guy would have played if you'd just been sitting at and so they developed this incredibly aggressive, loose way of playing, which maximize returns. So investing is really one of the only places where you just keep on accumulating knowledge and sharpening your skills and getting better. But it's complicated by the fact that the market moves in these very long cycles. Whatever you learned up to the 1999 didn't serve you very well from 2000 to say 2009, and then what you learned in that decade didn't work very well in the last decade, and who knows what's going to work next. Maybe being
are you calling out Robinhood traders right now with this?
I think they get a little bit too much
flack.
I think they get a little bit too much disrespect. I don't really know. It's hard to say. Like everybody, they're not very big accounts. They trade too much. But when you look at the stuff that, like, they are dip buyers at least. And if you're a dip buyer, you're either a bag holder or a value investor. And at the moment, they're both the same thing. So I can't be too critical of those guys, but I'm interested in mastering investing, getting it right, and I keep on reading and learning. Not too much. I'm sure there are people out there who say, "Well, you should have evolved into a compounder by now."
That's a fair argument.
I get a point of view, so I think that there's valuations are stretched on that side, and I think that some evidence for that is the fact that I've been calling a bottom in value for a long time. We have had a couple of months of running now. It's June 2nd. June 2nd, started about April 2nd. I think we've had a pretty good run for 2 months. Last year we had one that ran from about August 27 through to about December 17. Not to be too precise, I can't tell you the hour of the trading day that it started and finished, but that's about the outperformance. So that was about 4 months. So we need this one to go on for a little bit longer than that. Got a lot of ground to catch up for value.
Yeah, what happened in March?
This year?
Or from January.
This year?
Yeah. I'm a little salty here. My retirement account, who I treat like the account I hate, was like pretty much long energies and financials for the year because of a tax advantage dividend strategy. Yay! And it has just gotten hammered. So any reprieve that I find over the last couple days or months or whatever is nothing compared to the drawdown it took.
Is that more of a deeper value portfolio, or you're just like slinging it around doing whatever you feel like?
I don't treat that like I treat the account that I would run, like that I care about and that I would run for people.
This is where you get your gamble
I'm
out.
a little more speculative with it. Yeah.
And it's a grudge F account.
Yeah, that's right. Yeah. And when energy got beat up earlier, I was early on that, and then, all this happened and oof. Can we just talk real quick, cuz I got to give our boy Jimmy Chill a shout out. His recommendations last night. First of all, they might work. If you're a compounder bro and you know more about this space than me, fine, whatever. Okta, Zscaler, Zoom, Proofpoint, CrowdStrike, DraftKings, DocuSign, Amazon, Facebook. That's the Jimmy Chill. Buy them now.
Did he pick that March 23?
No, dude, he was pitching that yesterday.
That was a good March 23 portfolio.
Direct quote on DraftKings: "Is the online betting company really worth $13 billion? The question's irrelevant to this set of buyers who take the stock up every day there's an opening somewhere." And people want to know why I watch that guy. It's amazing.
Is he, like, the recommendations, is he saying just hold this until the next time I'm on, and the next time he's on's tomorrow night, so you can get out of it then?
I don't know. I was a little wired. I had a school board meeting last night, and it ends, and I can't go to bed, so I had a couple beers, and I watched Jimmy Chill pitch this. I almost fell out of my chair. I don't know how sophisticated his audience is. I do know you better know what the heck you're doing if you're buying those.
That's abusive. valuation doesn't matter, huh? Okay.
Well, the thought it was triggered when Toby was talking about the young poker players playing fast and loose, and I was like, oh man, Jimmy Chill was fast and loose last night.
I've really heard that. I've never heard more people say valuation doesn't matter. So Chamath says valuation doesn't matter. There are lots of guys out there like valuation doesn't matter anymore. I don't know if valuation matters or not, but I kind of think that if a lot of people start saying that, I really want to go back and make sure that my valuations are tight before I'm not abandoning valuation right now. And
They're playing a different game.
What, they're trying to make money?
How do you yeah, but that's the thing. You're
trying to be right in principle.
Yeah, that's right. Theory. I'm trying to be right in theory.
Yeah, but it's a I mean, what is space exploration worth? It's worth whatever story you can spin. So like you can't. I mean, fine. You want to build me a DCF? That's cool. I had a DCF on airlines that was great until it got exploded. I mean, the amount of speculative nature in many of the things that something like Chamath is looking at. I mean, yeah, of course, valuation doesn't matter. It's can you create more hype?
Very interesting that. Like, if I was to, like, why did that Virgin Galactic go up after the space launch? Like, so imagine that you own a gas station and you're thinking about building that gas station there. And across the street, they open up a gas station and it's like going gangbusters. Would you think then that your gas station is worth more because of that? Like, the competition just proved that they could do something pretty amazing. That's good for you now?
But maybe
I don't follow the logic there.
Maybe what they've proved is that there's a market for gas stations. There's a market for gas in your area.
Aggregate flows into gas stations. I could see that. Okay. But it's a different game. It's just a different game, which is fine.
I do think that sometimes what they're doing is that they think, well, a lot of people will have watched the launch and now they're going to think that this is a hot space. So now I'm going to go and what else is in there?
These people.
Yeah, I'm going to front run everybody else, and everybody else is thinking that too. I mean, I've seen people saying I'm going to go and buy Zoom info because people are going to confuse that for Zoom because they already did that with ZOOM ticker for ZM when they meant ZM.
Which I actually own. I almost owned ZOOM for a while because they were licensing their technology to Motorola to make modems. Not exactly the video conference. I mean, that's the thing. Zoom Video's a $58 billion company. Because I can go on the internet and watch a video with my friends for free.
I think the top line's about 600 million.
Yeah. Okay. Well, you're gonna have to grow into rosy projection.
I find Zoom a little bit interesting because Zoom is the worst of all of the video platforms that I use. I don't get it. There's so much competition out there.
Yeah, they got distribution now in universities, so that's pretty big. We'll see. It's not a shale producer because there's not that much cash flow now.
Brewster's feisty today.
That's right. I'm back home out of the closet.
Out of the closet. Toby, let me ask you this to kind of circle back to what you were saying about, wanting to become a master. What do you have kind of built into your process to make sure that it gets a little bit better all of the time? Like, because you're looking at quantitative kind of signals and like, do they translate into opportunity? Like, for you, what does that look like? Well,
it's not even necessarily quantitative signals. I'm just looking at new papers all the time. Like, not even just papers. Like, what's the impact of a short having free cash flow over the last 12 months going into it over the full data set? Does that help it or hurt it from the perspective of the short? And so, like, what is that? So, does having a really heavily indebted short, is that more dangerous because now the equity stub should be much more volatile? Or is it less dangerous because that's a company that fundamentally is going to run into some trouble? And so that's some of those things. Some things I don't think you can reason to from first principles. You just got to go and test them and see. But there are lots of other things that you probably can reason to from first principles, and it doesn't really matter what the back test says because it should be in there. So it's a balance between the two. It's constantly evolving. I don't, I've published a lot about the big muscle movements in the process, but I don't talk a lot about the finer detail of it because some of it's, I kid myself that it's not proprietary. I hate that word, but it's kind of like some of it's the special sauce, right? I'm trying to
Yeah.
trying to outperform at some stage.
Yeah, that's fair.
I think that there's a lot of traps in backtesting in that you can just run a backtest throwing anything in there and see what happens. And sometimes, like probably a lot of the time, it's going to work. And it might be the fact that you've just equal weighted your positions and you're comparing it to a market capitalization weighted index. It might be underperforming because this is a time when a market capitalization weighted index is outperforming. So there's a lot of ways that you can fool yourself, and as the great Richard Feynman says, you got to try to avoid that because you're the easiest person to fool. So a lot of it's what is sensible. What does that look like in a test? What's that? It's that kind of stuff. I'm sure that everybody kind of ends up at the same point, but just trying to get there sensibly. And I'm not trying to squeeze the last few percent out either. I would really rather give up some return in a back test for something that makes more sense to me as a value investor.
Yeah. So not like the, Ren Tech, which is more like they actually probably, I think, preferred the signals that made no sense because then they thought no one else would be looking for it.
Right. And that seems to have been a good way of doing it. But I think that also they're running many signals and devoting a little bit of the portfolio to it too, which I can see that would work.
Remember when Toby kept them off his fantasy list for greatest investors ever, which is ridiculous?
Well, I introduced the additional criterion that you had to pay for it, and they were the top line. So I put mine together with everybody off the bottom line. I think I got Druck and Greenblatt. And I think I didn't.
Yeah, you left your money on the table. That's fine. I spent too much. I went on margin, so I got called.
You had nothing to invest, but you had some great investors in there to run the portfolio.
Right, yeah. I had to pay a lot of borrow, but boy, I was going to catch up. Make it up in scale.
All right, let's do somebody else. We've extracted everything that we possibly can from that
dead horse.
I've been going through the aerospace value chain because it's super decimated, as many of you may know. All 10 of you. I had a good conversation with a buddy that works at Boeing last night, and just the amount of slack that is in Boeing's system right now. Right, he was telling me that at some point, they were talking about maybe producing 80 737 Maxes a month, and now they're looking at. I mean, it's almost stopped right now, but you're looking at I think 30 is the number that I heard is sort of the plan. And just how that trickles through the supply chain, like Spirit Aerosystems delivers them. They refer to it as shipsets. I think it's fuselages and wings for the most part. And Boeing was paying Spirit, or had agreed to have Spirit produce 50 to 55 last year, even though the Max was ramping down production. So there was already a sort of excess inventory in that system that had to be worked off. And now this. So it's it's just been a pile up of issues. And I don't really know. I need to get a deck together and sort of sort through my thoughts. It sort of fits nicely within the acquisition project that I'm doing, because you've got TransDigm and Heiko are within the space. But it's been interesting. The security that is pretty interesting to me, or a set of securities, is United Bonds, actually. You get a lot of yield. You're higher in the capital structure. You are... it's the operating entity, right? Or the holdco rather. So it's you're not secured by the airplanes, but you also don't have the equity risk. All that they're talking about is prudent management and paying down debt. Scott Kirby's a G. That guy knows how to run an airline. And they got a lot of cash right now. They got about 250 days of cash, burning $20 million a day. So obviously, by the end of the fourth quarter, but you got to assume that they're going to get some delay or some, traffic coming back, which these riots probably aren't helping very much. But That one's interesting to me, and then I'm sort of going through all of them, but it's I have to think that there's some value somewhere in there, and like from a high level, just thinking about how valuation occurs and is built and whatever, the truth of the aerospace super cycle is going to continue into perpetuity. Like that was obviously flawed, right, in December, but it is also not as bad as it feels today, right? I mean, that's normalization, and there's no visibility right now. So the idea that people are not going to get more amped up about it over time, I think the probability is almost zero, and that's going to reflect in the models. And you're not buying into a rosy outlook is sort of the short story. And I think, if you got some companies that can survive, you got a reasonable shot at having a pretty good puff in 3 to 5 years.
And so you're moving up the cap stack a little bit to get the debt because it's got a fat yield rather than sitting in the equity.
I'm thinking about it. Yeah. Like United, I mean, you're looking at 11 to 13% yields to maturity for a couple years, like out to 2022, I think is 13.3% or something. And it's like an equity hybrid security, right? It's not safe, but it's a whole lot safer than the equity, and you got a pretty good yield there. So that's sort of how I'm thinking about that particular part of the value chain. But I'm thinking about stuff like Hexcel, they make like composites that are taking greater share of airplanes in general. They also sell into wind mills. Like I don't know enough to talk about the entities, right? But I'm trying to work through like where's the kink. And I think just from like a capital cycle theory standpoint, 3 to 5 years out, this shit is going to be tight. I mean, they're firing all their labor. They're going to be lean. So if you think about, okay, how's this look in a couple years? I need to figure out where the profits are going to flow, but they're going to flow somewhere. The supply chain's not going to be stopped forever. So
that's a bold take.
Well, you don't have to have the smartest take in the room. You just got to be right.
I mean, I hold Love and SBR equity.
Yeah, Spirit.
I got Spirit. Yeah, that's worked out. Okay.
I mean, they are like decimated right now. I think their stock's off like 70%, right? So it's just one of those things, like just from a gut check. And I know that without doing the math, I get that I'm just talking out of my ass here, but what's the probability that the value of a perpetual asset has changed 70% in 3 months? I would say almost zero. So now you get into questions like, was it valued properly before? Is it valued properly now? I don't know. What I do know is if you're trying to stack the odds in your favor, looking in areas like this seems to be a better way to stack the odds in your favor than buying whatever Jimmy Chill recommended.
Does the kind of M&A component of that, when you talk about Transdime or Heiko, is that like that you just think they're going to have a richer opportunity set here over the next couple years of stuff that they can buy?
Yeah, I think I don't know. You get into a problem with size with both those entities, I think, right? It is easier to build through M&A on a small base than a larger base. But I think the idea that the big don't find some people to swallow up is hard for me to fathom. Because I got to think if they're struggling, like everyone is struggling.
When do we normalize?
Hexcel, they called off a merger recently. So, does that sort of restart down the road? I don't know. But that's sort of what my research project is right now.
When do we normalize? How do you think about that?
I don't know, man. I mean, anyone that knows they're lying. I mean, right now, so there are a lot of competing thoughts that I have. One is airlines are going to retire these older aircraft before they have heavy maintenance because they don't want to incur the cash outflow. The other side of that is United is saying, we have a young fleet. We're not going to buy new airplanes right away. So we're going to stretch out, our fleet age, which is what Delta did pretty much from 2009 to today. They sort of like took a we can improve our cabins, but not our fleet. And that worked out. So I don't know how it all shakes out. I really don't. What I am confident saying is wide body will come back slower than narrow body. So the 737 and the A320 is going to come back quicker than the dual aisle transcontinental stuff.
I think it comes back pretty quickly, and I'll tell you why. Like I've sent you guys that chart on mobility, and what that chart shows is we're basically back to baseline for walking and for driving. So the peaks now look like the troughs previously, and and that was a few weeks ago. So we're probably now getting back to baseline. Public transport still basically zeroed out, but I'm not sure how much public transport is actually running. Where you fit flights in that is a little bit harder, right? It's not public transport necessarily, but it's also not driving in your own car. You're not as safe as that. 9/11 equalized in about 3 months, normalized in about 3 months. I mean, even if it's not 3 months, that's still, we're kind of a pretty adaptable species. We forget really quickly.
I mean, I have 27% of my portfolios in travel-related stuff, so I have a pretty big bet that it's going to come back.
Yeah, I think so too.
If that doesn't come back, then I'm just wrong. But like, I'm as confident in that as I am in anything. Like,
well, you priced. You got the right price for the bet.
Yeah, and I bought a lot of it in March when everyone was terrified. So, we'll see. I mean, this is sort of like what I have said that I would wait for forever, is to have a view on something, have the world present an opportunity, and swing. So I fucking did it. If I'm wrong, I'm wrong. Like, but that's what I did.
Can you hedge that travel bet with the Jimmy Chill portfolio?
No, I'm not messing with Jimmy Chill's portfolio.
Barbell portfolio. Zoom on one end, Spirit on the other.
Only Splunk. That's the only one that makes it in.
Did he recommend Splunk?
What? No, Jimmy Chill would never recommend Splunk. It's got problems.
The problem is people aren't buying it fast enough.
Hey,
there's a lot of growth in
man.
it.
There's good
Growth's
people
not the issue.
I'm just teasing.
It's good people up there. So I don't know, but that's what I'm doing right now, and I think it's interesting. It's interesting to think of all the slack that has been introduced to a system that was predicated upon tightness, and how does that come back, and where does that? I mean, it's bound to create some sort of seat shortage eventually, or some sort of inflation somewhere. It's a lot of research I got to do, but it should be fun, and it's interesting.
Yeah, it's a good way to learn about a new industry.
If anyone has suggestions, I don't have answers, so let me know.
What's a good way to learn about a new industry? Losing some money in it.
A little tuition.
I'm right there with you, Bill. I'm not criticizing. I'm just asking questions for my own purposes.
Yeah, no, I don't. I mean, obviously, I don't own any of the stuff that like I'm looking at now. But I do. I mean, I've got a pretty strong view on the airline industry and what I think is going to happen and why I liked it. So then it's a matter of just sort of working back and seeing, are any of these suppliers to it actually worth a bet or not? But they are decimated. And, Hexcel was a compounder before this. And now what? It's like a company you can't own. Get out of here.
I think Chris Bloomstrand said he held it and might have sold it.
Yeah, we had chatted on Twitter real quick. I mean, there may be reasons not to own it, but that's just one, right? I mean, my buddy from Boeing says we cannot manufacture the 737 without Spirit Aerosystems. Okay, so maybe that's a clue that it's a business that's got some value. So what's the value? I don't know, but I like to search in headline risk.
Me too. Filled up a portfolio with it.
Just called value?
Yeah, well, I got AGO. AGO is for people who like living life right on the end of the wedge. It's a MBS wrapper, and every time there's some bad news with some counsel somewhere failing, they're right along there with them. AGO underwriting the debt, but still compounder. Look at the adjusted book value has been compounding really quickly. It's an interesting position, and it's cheap. So, but I've held it for a while. I know it pretty well.
Compounders are just stock price, man. It's not the underlying business.
Yeah,
you must be mistaken.
I've learnt that.
Yeah, well, okay. I'm glad that Also, did you know that growth and value are tied at the hip?
I've recently been told. I haven't seen a drawing of it yet, but
Okay, I just wanted to.
I want to see how it works.
This is an old conversation we had, and I just wanted to come back with that. Ugh.
Growth is just expensive stuff, right?
I think so. Yeah, I'm not sure. I know it's joined to value somehow. That's all I know. I'm just reciting Buffettisms.
It's cheap on a 2050
Yeah.
earnings.
Yeah, it's going to grow into its valuation. Valuation doesn't matter anymore anyway.
Not when you discount at negative rates.
Yeah, well, that's a good point. That is the one kind of thing that I can't figure out either. Like if maybe FanMag is the place to be if we go negative.
Yeah. I mean, look, I think I like those businesses in general. Though Facebook's found themselves in a world of shit with their employees. Turns out that it's not an easy dynamic to manage. And maybe I'm over-exaggerating, but it does seem like if you're part of your advantage is human capital, this is a delicate time, as is Twitter's.
Yeah, at least you have a lot of cash to sort of figure it out with your Facebook.
Yeah. And they print it every day, which is nice.
If you can get that.
Yeah. With no cost of goods sold. Well, I guess they got storage and stuff, but at least you got all the people that are all mad creating your content. It's like Fox News without the personalities. Pretty good combo when you don't have to pay your talent.
Jake, do you want to take it away?
Veggies?
Yes, it's veggie time. All right, so we're going to be talking about an article, or I guess an essay you would call it, from 1926 that's called On Being the Right Size. And it's written by a geneticist whose name is JBS Haldane. And he was sort of a science popularizer of his day, kind of like a Richard Dawkins or a Stephen Jay Gould. So in this article, he's talking about how every type of animal has the right size that it's supposed to, that it becomes. And it comes down to math is the reason why. So the first thing to imagine that he asked us to imagine is take a normal man and turn him into a giant. So he's 10 times as tall, 10 times as wide, and 10 times as thick. And he's got that would then make him 1,000 times the normal weight of a man, right? However, which would be probably around 80 tons or so. If you took a cross section of his leg and looked at his femur would only be 100 times the size of a normal man's. So he has basically, that bone would have to be 10x the strength of a normal man's, otherwise it's likely to break. So every square inch of giant bone has to be that much stronger because the mass is growing at a faster rate than what the cross section of the surface area of the bone. So, and it just so happens that the human thigh bone does break under about 10x the normal human body weight. So it's likely that a giant, if it had a similar bone strength, would break its leg on every single step that it took. So, so
That's
you can imagine, like,
for the giant.
Well, maybe this is like, why Yao Ming's career was so short, right? Like, this is a pretty good argument for why he would have foot trouble. Now let's imagine gravity for a second. If you take a mouse and drop it down a 1,000-foot mine shaft and it lands on a reasonably soft surface, it will be dazed, but it will live. Haldane tells us that a rat, when dropped that same, will die, a man will be broken, and a horse splashes. This is what he says. It's pretty, it's a little gross, but what it has to do with is the weight to surface area ratio of a falling body. So if you imagine that, this is why a parachute works, is because it greatly increases your surface area that the air has to move around while not adding as much weight. So insects, this is why insects can crawl on the ceiling, because their gravity doesn't hardly affect them at all. But where insects are instead, where they get afraid, is actually around water. So if you got out of the bathtub, due to the surface tension of water, you have about a 1/50th inch layer of water on your body as you get out, which weighs about a pound. So we don't notice it because, 1 pound evenly distributed over your body doesn't really register. But if you're a mouse and you're getting out of water, it's about your entire body weight. A wet mouse needs to be able to carry its whole body weight out. Now, if you're a fly that lands in the water, it's many times your body weight that you have to be able to fly to get out. So that's why you see
stuck
a fly
in the
trap,
water.
They get stuck in the water. So this is why most
enough.
insects have they call it a proboscis, I think it's called, which is basically like a tube that sticks out of to be able to drink water so they don't get too close to the edge and fall in, right? So I was trying to think about like, what does that do for a business? Like, what's the business context of like, what's the weight of water? And maybe it has to do with like regulation and compliance. And, if you are a little insect in the business world and you have to try to get your own body weight out and you have this like compliance, it's weighing on you, you can end up drowning in it. Whereas if you're a really big company, you don't even notice the compliance problems, right? Like if you're JP Morgan, you have an entire team of compliance officers who can take care of this stuff. So you could see like, size, when it comes to size, compliance kind of things matter. The next thing, I don't know, you guys have any comments on that before I jump to the next part?
No, I like it so far.
Oh, Bill, you're muted out.
Oh, my bad. How do you own Berkshire when you're talking about size? This is the whole argument against them, right?
But is it we're not
Too
clear whether
big.
it's a benefit or a negative yet, are we? Berkshire can
Yeah,
get out of
yeah.
the water and it doesn't even notice the water clinging to it, but it can't cling to the ceiling.
Yeah, or maybe it's too big to do anything, that
It's toast if it falls down the
previously
well.
it could have been doing.
All right, we've got more. We'll cover some more ground and then we can come back to Berkshire, okay?
Okay.
All right. Now imagine a worm that has a smooth skin and a straight alimentary canal, like basically the food that comes through. And now take that worm and make it 10 times as big. Well, what ends up happening is that you would need to have 1,000 times as much food and oxygen. So the worm absorbs oxygen through its skin, right? And it absorbs nutrients through its alimentary canal. You would have to have 1,000 times as much food and oxygen available for this worm to support a 10x in its size, because the surface area of inside the worm and the outside of the worm only grows at 100 times, whereas the mass grows at 1,000 times. So now, how evolution has got around that has been to create more complex shapes. So like our human lungs are incredibly folded up and dense, and they have incredible surface area. It's actually about 1,000 or about 100 square yards, which is about half of a tennis court. Your lungs have that much surface area inside of them, right? So that's how we're able to draw so much oxygen out of the atmosphere. Now, think about insects. They breathe through their skin through these little holes. They don't have lungs. They don't actively pump oxygen through their body. It's just about the sheer diffusion of molecules like bumping into each other that move around. And so what ends up happening is that any insect that is, if the hole is with more than 1/4 of an inch away from the air, it won't diffuse enough, and that will be then an oxygen depleted area of an insect. So that's why they don't get to be bigger than they are, is because they don't have a way to pump oxygen throughout their body. Okay?
And thank God.
Yeah. Maybe thank God. So let's bring this back to the business world and think about oxygen as sort of information and information processing. So every business takes all of these inputs, energy, information, human talent, capital, and they arrange it in some kind of miraculous way that is able to fight entropy enough. And then the output of it is that we have delighted customers. Like they're doing things for people that they want to get done. Well, if you think about the information processing as like the oxygen, you can imagine that, the customer interaction and the information from that has to be able to diffuse throughout the entire organization. Otherwise, this is like the insect that gets too big and it can't it can't get oxygen or information about what's making the customer happy deep enough into the organism to be able to like have it process the information correctly. So when we think about that, like, imagine like a restaurant owner, the guy owns the restaurant. He sees every customer, like he can see the smile on their faces or when they're pissed about something, like he's got the direct feedback. He's almost like an insect in that the information is like right there, but it can't get above a certain size because otherwise it breaks down. Well, let's think about like, what does work from home mean for this if we're trying to process information? Think about a business as an information processing organism. Well, there's this famous 7% rule study that, it's a little bit problematic in that, like, there's been replication problems with it. But just as a thought experiment, 7% of communication is the words that you're saying. 38% is the tone, and the other 55% is body language. Now, I don't know about you, but like on a Zoom call, okay, we have the words, we have the tone. I don't know how much of the body language comes through in a Zoom call. So
Andrew Wilkinson had an interesting tweet where he said it's like talking to someone on the spectrum because you're kind of looking at them, but they're not quite looking at you. They're looking in a funny place.
Yes.
He said
this is why the people that are saying that there's going to be like permanent changes to business travel have never done sales.
But also,
it's like a bunch of spreadsheet nerds.
But it's a cost-benefit analysis, right? If you're selling something hugely expensive, you're still going to send the dude out. But if you're selling, like, there's the point at which you can sell something cheaper or more expensive is marginally higher.
I don't know, man. One of the best salespeople that I ever encountered was a paint guy. And he used to have this move where he would hand you the clipboard, and the way that he would hand the clipboard, the pen would roll down the clipboard and hit your hand first. So like you automatically had a pen. He closed so many sales. You can't do that on Zoom.
But equally, you can't replicate that over lots of different sales guys, right? It's something that was a trick that maybe you can.
Sales is a personal game, man. I think big sales, small sales, all sales.
But then there are companies. So this is when Jake was talking before, I was thinking this is the huge advantage that companies like Microsoft, Facebook, FanMag have. Like they have this. Everybody who tunes in gets the same screen, and there's a small group of people can optimize that relationship. Doesn't work for everything, but you do have a huge advantage where you can control each and every customer interaction and get it to where you want it to be.
Yeah, I think there's something to that actually on the quality of the data. So if you imagine like that using data to make customers happier, if you have some kind of advantage in the data, it's almost like you're breathing an oxygen, enriched air relative to your competitors.
You sort of just laid out the bull case for Disney.
Well, maybe. I mean, think about
that's it. The
Netflix,
data from Disney Plus,
the recommendation engine, maybe. Google with the search and the fact that like they see where you click once you sort of try to answer the question that you just asked Google, and they see if it like worked or not, and they can get that feedback loop and then present it to the next person. I mean, there maybe is an argument for winner take all because of that. That maybe the richness of the data allows you to delight the customer in a way that your competitors couldn't.
Do you think that Netflix is getting there with that? Is Netflix doing that?
I mean, I don't know. Their recommendation engine's supposed to be, super sophisticated. I'm not sure how it's. I've never been.
Well, it's missing me. It doesn't know me.
It's just the bundle. It's just the direct bundle. So like the bundle has a bunch of stuff that you don't like in it either. It's got to get you the one thing that you do like. Tiger King, which everyone likes.
I didn't like it.
Human.
I didn't like it.
God,
can't watch it.
Probably because it reminded you of your hometown in
Australia. There's something to that. That's not entirely wrong. But the original conception of Netflix, I thought, was going to have this very long tail of movies that, if there's, so you could, So, there are lots of little cult films that there are small groups of people want to watch lots and lots of times. And so they were going to capture that. And then it changed to, we're going to get better data and we're going to make better movies and TV for people to watch, which I think is much, much more difficult. And if I go on YouTube, YouTube movies now, if you go on there, they have that long tail. Like, if you want to see Predator, it's on YouTube. If you want to see any of those banging action movies from the 80s, Predator stands up really well. The original one, don't mess with anything else. Or you can watch the second one in a way, that's great too, but everything else has been terrible.
Yeah.
You can find that long tail on YouTube. Maybe YouTube wins that battle.
This is the Disney argument, man. Evergreen content, franchises you can roll out now, data on what people are watching, how do you reinvest in the parks, what experiences do they want? 100%. And content that pays for itself.
As I'm wont to do, let me throw a wet blanket on this a little bit.
And they got 55 million direct-to-consumer
I got one less now. I cancelled it over the weekend.
Oh, you hater. All I was thinking about with Jake's, before you throw a wet blanket on it, is mid-caps were screaming in my head, because I think that's probably the size. I mean, I've had this thought for a while, but I think mid-caps are probably where you're big enough to get some scale advantages, but small enough to be personal.
Interesting. Let's talk about base rates a little bit. And so from 1994 to 2014, S&P 1500, what percentage of companies had a greater than 30% growth rate for more than 5 years?
Less than 1%. I'd say 0.1%.
Bill?
I don't know.
You have
I'll go with Toby's. I'll go 0.11%.
No, so it's actually 2.9%. So you have a 1 in 34 chance. You have a 1 in 34 chance of, if you threw a dart at the S&P 1500, finding a company that had grown that consistently. Okay. How about a 20-year run? What do you think that odds are?
I
should know this because I read this study. It's low. It's lower than that.
It's base rate paper, basically.
It is. So it's 0.3%. You have a 1 in 330 basically chance. So if you're a compounder and you like that as an investment style, you have to a little bit ask yourself, like, what are the chances that I am God's gift to analysis enough to be able I'm the one who's going to pick the 1 in 330 base rate. Kudos to you if you are. I'm a little skeptical that we're all that smart.
I guess the rebuttal to that would be you could add some other analyses to that to kind of, what criteria do those ones that outperform, what unites them? Let's look at those characteristics, and then you could say, and what are the consequences for sort of slightly missing there if we get such a blockbuster run out of those? I don't know the answer, but that's an interesting line of inquiry.
So I guess my last thing I'll say is, like, do you want to bet on insects or elephants in the world? And keep in mind that 25% of the known species on the planet are beetles. So
yeah, but an elephant's really smart, dude.
Ants eat elephants.
Just saying. That's fucked up.
Not the other way around. And there's probably more ants by mass than any other animal on Earth, right? As if somebody knows that, but somebody's got that. That's a true fact. It'll be out there on the internet.
Yeah, I know. I don't know how they can tell those kind of things, but actually, the microbes outweigh us by a lot. If you count soil, microbes in the soil, like, we're just sort of like playing a little game, but they're like the real deal for Earth.
Yeah, but they don't have Netflix, so we win.
They don't have Netflix, yeah. All right, I'm done with giving.
I think I'd bet on crocodiles. That's what I'd bet on. They've made it a long time. You didn't give me the chance, but that's what I would bet on.
Is that mid caps? Are crocodiles mid caps?
I don't know. You lost. I pretty much don't even know what we're talking about anymore, to be perfectly honest.
Size, scale.
I'm at the point where I'm thinking about if I want to own an ant or an elephant.
If Meb Faber was here, he'd say the biggest company on the stock market almost invariably underperforms. And that more recently that hasn't been true, but for most of the history of the stock market, you can just about fade the biggest one relative to everything else. I guess for a number of reasons, right? If you get to be the biggest, you got to be very mature, and you've also got to be yeah, valuation's probably a little bit stretched, but that's not been true for the last little while. I think it's been Apple, been doing pretty well. There's a few others in there, Microsoft, Google, kind of duking it out for number one. Probably true when it was Exxon.
A bit of a problem too, like
Apple,
if you pull up like Heiko's 10K and you look at, I think it was like 2016, they really decoupled from the composite. So like obviously if you knew about Heiko in 2011 and you bought it and you believed, like you crushed. But, you know, somebody like me that's coming in, you know, today to research it, like I'm already paying for a lot of the stuff that's been revealed. So, you know, what's the probability that I'm not the sucker at the table, and how long can that continue and all that stuff? So
depends on what portion of your valuation is growth in it they're in.
You almost certainly have that problem with the biggest stock in the stock market, right? It's like, who's the incremental buyer? I mean, at some point, flows do matter. So
it's the other way around. At some point, fundamentals matter. Flows are the only thing that have mattered the last few years.
Hit us with your questions.
Yeah, question time.
Well, I mean, you think that the best stock in the stock market has bad fundamentals at any time? I'd imagine that the fundamentals are pretty strong, and you get somewhat of a.
How do you define best?
Probably relative to price.
Well, the biggest, I would think the biggest, usually at the time looking at it, has some of the best fundamentals. It would be odd to me to think that the biggest stock in the stock market is just some shit company.
The biggest stock in the stock market will be the one that looks like it has the brightest future, because it's the one that gets bid the most.
Right. So
and the one that's probably likely to have a reversion to the mean in the fundamentals.
The most popular one.
Yeah, I'm just saying that I think it's probably popular because the fundamentals are pretty good at the time.
I got a question here.
They have been good.
Did you guys have a look?
They are good today. You are making is it going to continue to be good? I'm saying today it's good.
And that's what I'm saying, is that the mathematics of genetics and insects and all these things would say that there are some kind of limits onto these things, and that if you're just projecting outward on a straight line, you know, like extrapolation, I have a little bit of a question mark about that. That's all I guess I'm trying to say.
Okay, so we're not buying ants or elephants?
That's for you to decide in your heart.
Look, man, I totally agree. Like, I mean, you know, look no further than Aerospace. People extrapolated in December. They just got screwed. So
I got a couple of good questions here, fellas. Let's dive into the questions. Did anybody see I posted Icahn's portfolio yesterday? A lot of commentary on that. I was surprised, actually. Most of the time those portfolio tweets just slipped through, but Icahn's got picked up. Icahn's stubbed his toe on Hertz, but I heard from a buddy over the weekend who's in mortgage-backed securities structuring and stuff like that. Commercial, there's this portion of I'm going to mess this up. Apologies to anybody who actually knows what I'm about to try to talk about. But CMBX, there was a big short. That was this time around. The big short was in the CMBX, the bottom tranche of that. And there was a fund set up to capture it. The guy had $700 million in it. Investors just ran out of patience and they had to dump the whole portfolio. Icahn swooped in, picked it up, made an absolute killing when the market got destroyed. And so that's why I think he's come out and he's been prepared to just say, yeah, we messed up on Hertz. And he's dusted $1 billion there, but he's made much more than that on the other side on Hertz. The question is, what do you think about his portfolio? It's pretty, like, it's a deep value portfolio. Did you guys see it? You see what's in it?
Mm-mm.
Yeah,
it's like a bunch of energy.
That's
and what else does he have? Like, he's probably got IEP in there, and then he's got like some other quasi-activist holding, right? I'd imagine. I mean, I have no idea.
That IEP portfolio, this is his, the listed company. IEP is the ticker. Icahn Enterprises, I think.
Yeah.
Have a look at the stock price on that thing. It's crushed at the moment. It's in a trough. I don't know exactly where it's trading, but have a look at the runs that has gone on from like the late. I think it got put together in the mid 1990s. It's had these two monster peaks in it. It clearly goes on very big runs when deep value gets a little bit more.
Holy crap! Its dividend yield is 16%. I mean, I guess it's an LP, but still.
Is it an LP?
Crazy. Yeah.
It's had some monster runs, and it's kind of looking more like it's in a trough. I don't know. I haven't looked at it really closely. I just kind of looked at it because I got the question yesterday on Twitter, and so it's interesting. It's kind of worth digging into.
Yeah, I find some of these like kind of almost a close-in fun type of argument for some of these guys a little bit interesting. I mean, green light.
Ackman's.
Yeah, Ackman's. There might be something to that. If you could, these guys like some of the, especially Einhorn, like he's about as cold as you can get right now, reputation-wise, right? Like everybody's bailed on him.
Yeah, and you get him a discount too.
At some point, I would still bet on him. I think he's smart. So maybe you get a nice reversion to the mean and his results, as well as like since everyone's just shit canned it.
Yeah,
the world can leave smart people behind.
Forever or momentarily? What are you saying?
I mean, I think
forever.
people can lose their knack for the world. Yeah, so what's he got? CPQ, Freeport McMoran, Occidental, Chenier. I have no idea about any of these things. I have absolutely none. If it outperforms, I wouldn't be shocked.
Pontificating about it.
Well, it's like a bunch of commodity plays. He's gotten his ass handed to him in the Permian. Like, he's not good in energy, I think, objectively speaking. Occidental, I don't know. Was that the world or was he just wrong? I have no idea.
He was there with Buffett too.
Yeah, well, Buffett's higher in the cap stack.
He's getting paid out lower in the cap stack.
Yeah.
That higher in the cap stack's turning into lower in the cap, turning into common equity.
It's true. It's true.
Bill Miller picked up FTCH. I know you were researching RH for a while.
I don't know anything about it. Sorry. Farfetch.
Company?
It's called Farfetch, I think. It's some UK luxury brand, I think. I don't know. I'm sorry.
Sounds a little far-fetched to me.
Bill Miller's a beast, man. That guy sees things before they happen. I think he is very, very underrated in the community of people to follow.
Is he underrated? I think he's got...
Not many people talk about him, man.
Yeah, I see him around a lot.
On him because he blew up.
Well, that's fair, right? That's you get a little question mark if you blow up one time. Ackman's got the same thing.
Deservedly so.
Well, you guys just said that, smart people have bad results sometimes, right? And the world doesn't leave them behind forever. So maybe you got a little bit risky.
Einhorn hasn't blown up so much as he's just underperformed for an extended period of time.
I think that's blowing up. It's not blowing up,
Yeah.
but
there's a difference
pretty
between
permanent impairment.
There's a difference between closing up shop on your LPs though, and leaving them holding the bag and then starting something else again.
Maybe
that's a different.
Maybe.
Did that happen to Miller? It wasn't it was a mutual fund. Did he get pushed out, or was that, I don't know. I'm purely speculating here.
I don't know.
I'm asking a question, not speculating.
There is a difference, for the record. I get that, but you underperform for that long. You're pretty close to cost. I mean, you've done a disservice to your clients.
Well, what do you do though? You stick to what you're supposed to be doing, which is what he's done, and it doesn't work.
Yeah, I think. Look, if I was talking to him and he gave two shits what I had to say, I mean, hasn't he been short Netflix forever?
It depends on how you size it, right? Depends on how what you're in.
Yeah, but like his returns would suggest that it hasn't been a good trade. I mean, maybe you just don't know that entity. I mean, and sometimes it's okay to be really frustrated by something like Tesla and not put odds on it and not cost your clients money because you think you're smarter than everybody as the market rips in your face year after year after year after year. Eventually, you're the one that's wrong. And like, even if you're right, you're wrong because you're paying the drawdown fee the whole time. Like, you got carry in that.
Depends on how you size that. Depends on what the function of the position is. Like if it's a hedge against, like, clearly that stuff's going to get dinged up when we go through a drawdown.
Yeah,
and there's a lot of stocks that have that trajectory that, like, there's no earnings, there's no cash flow. They're basically living on stock sales, and they're faddish and popular, and they get a big rip, and then they fall back to earth eventually. So some of them haven't done that yet.
Tesla is up 60% year to date or something.
Yeah, I would say it's probably more than that, isn't it? I
Might be
don't
more
know.
than that,
It's up a lot. It's up a lot anyway. I track it. I don't have a position in it anymore. I've donated some money and I've made some money and donated some money again. So I think I'm probably down on it.
I mean, it's like Greenwald on Amazon. Like, these guys are really smart. If they could avoid the discretionary shorts, I think that probably their returns would be much, much better.
Well, that's true of every single bull market, right? Like 10 years on, anything short.
No, this wasn't a bull market. Greenwald I think he lost like $16 million on Amazon. That's not a bull market. You were wrong. Like, I mean, that's just the world.
Okay, that one. But I'm saying in general, any driving with the parking brake on over the last 10 years would have looked foolish.
Yeah, I guess. I mean, after 10 years, you're wrong.
But you can't.
I mean, how many careers have 10 years to go underperformance? Like, it's not. Yeah, fine. You can sit there and be like, well, on a 1,000-year spectrum, this is just 10 years that are not good. But like, part of the game is also identifying when the world is shifting. And if you're not doing it, like,
the world's always shifting though. The question is it secular or cyclical? And sometimes they look the same, and that's the difficult thing.
No doubt. But I think that the hard thing that managers have to answer for, and after 10 years, I think it's easy as managers to say, well, it's all Fed induced and it's all passive driven and all that. Like, there's a vehicle that adapts to the world, and it's the index. And
the index was flat from 2000 to 2010, and it had a monster drawdown, a couple in the middle.
Yeah.
And if that was an active manager, he'd have been fired. She'd have been fired.
Yeah.
So I don't think you can look at. The thing is, you have to make the decisions in real time the whole way through. And if you have some sort of discipline, you got to keep on applying it. You can't look at the fad and change the fad because the fads always look secular at the point that you're putting on the every market boom has this. It's changed. This time is different. It looks secular and it's not.
Yeah. I think that's why people that come to this podcast pray at a value church, right? I mean, it's sort of your North Star where you say, like, I am going to buy things that I perceive to be good value. My only point is if you've underperformed for a decade, like, there's a chance you're not very good at picking good value.
There's a fire in the basement of this church.
Well, value, the you can look at those value deciles. And that's got no human skill in there. That's just what the decile has done. The decile has been that beaten up, and it depends that you can if you're a price to book style guy that started underperforming in like 2006, I think. If you're a flow guy, you've been able to hold on for a little bit longer. But Einhorn, I think, looks a lot like an EV/EBITDA style investor, and he's kind of tracked EV, and like that was monster run first part of the decade, first decade of the 2000s. Less good run second decade of the 2000s. Might be like turning the corner a little bit since April 2nd. I'm calling it. Value's back. I'm not.
I hope it is. Everybody hopes.
But curse this.
I think if you're not at least, I don't. There's just a lot of people that I think have been left behind, and it's hard to argue that some of them haven't. I don't know Einhorn, obviously. I don't study him. I have no idea. Maybe he's still got it. But it just seems to me that some of these guys have been so dogmatic in how they're thinking that they miss the world changing.
Maybe it's a cycle.
And maybe they're right. Maybe the world hasn't
different.
changed. No, it's not different. Every time people get left behind.
That is true.
All throughout life, every time that somebody can't iterate their process, they become old and society forgets about them.
Well, here's one thing. Valuations have become increasingly stretched. Like if you go back from in the data that we have, 1850 to today, valuations are higher. So if you've had this discipline where you're like, I'm not going to pay more than X, you've been left behind. That's what's happened. And so the new younger guys come in who are more prepared to pay up. They've been able to survive for a little bit, but then as they become old guys, that the valuation stretches away from them too.
Yeah, no doubt. Eventually, valuation stretching too far is going to be a real problem.
Or you become a Momo guy, and then you ride it, and you're a hero right at the top, and then you get your ass handed to you down 90% when momentum comes back to earth, which it does on a regular basis. Hasn't this time around yet.
Some Twitter Momo guys get quoted by Bloomberg. The ultimate Momo bro.
Fellas, we've run way over time.
Good session, boys.
Thanks everybody for tuning in.
Have a good one, people. See you next week.
Stay safe out there.